1 year, and we're using a case study that we just did for a client out of Texas. In fact, this is his second sale that he used the Deferred Sales Trust with Capital Gains Tax Solutions. His first one was a $15 million sale that he tied up for about $11 million. This was land in the Taylor, Texas area, and he tied it up for $11 million and was able to assign his interest in this sale to the Deferred Sales Trust, enabling him to defer the difference between $11 and $15 million. This second deal is for a deal, it's just south of Austin, Texas. In fact, it was a land sale, and then this one was a $29 million sale that he tied up for $24 million. So the question is, and that we're going to be answering, is how do you defer capital gains taxes on the sale of something that you've held for less than a year? Step one is to set up a deferred sales trust. In fact, you can go to capitalgainstaxsolutions.com. We can get started today. No cost, no obligation the way we work. We only get paid if it gets closed. But that's the step one. You choose the name of a trust. Trust could be called the Texas Austin Deferred Sales Trust. It could be called Marin DST 2022. Names are just very simple to come up with, but that's a single entity trust that only does business with you. Step number two is to connect us with your property specialist, whether that be a real estate agent, whether that be escrow and title, and we can insert the language into that contract, which gives the trust the opportunity to receive the funds at closing and you to receive a promissory note. At the very foundation of the deferred sales trust, remember, it's just an installment sale, and this installment sale is a way for you to lend the funds to the trust in exchange for the trust to pay you back over time. In other words, you get a promissory note. And if we do it in these orders, you're able to defer that tax, which is really powerful, right? Because then what can you do? You can earn interest on the money. You can invest it into future land development deals or other business ventures or the stock market. You can diversify your wealth. You can do it all at optimal timing, which is super important to the foundation of the deferred sales trust. So let's walk through the deal in detail here. So this particular developer, owner, entrepreneur, real estate professional, he likes and loves to buy properties in expanding areas, places where new corporations are coming in or expanding their footprint there. And this is exactly what it was. It was in the path of growth. And so he found and negotiated a price with the current owner, and he tied the property up. And over a period of time, typically 6 to 12 months, he's able to take and go into with the city and start to entitle and start to improve the land most of the time on paper, sometimes with utilities, sometimes with different things to the site. And that increases the value. But in his scenario, he doesn't actually close on the land until he uses the deferred sales trust. Okay, so puts up a large deposit or fair deposit there, and then he puts that on the line. Typically, it's a non-refundable deposit after a certain period of time or certain conditions are met, or if they need more time. And so that's exactly what he did. And then he had the trust already ready to go, set up, and then he asked the buyer to cooperate with the deferred sales trust. So upon exit, the funds went to the trust. Therefore, he's in a deferral state, him being the owner, and the trust receives the funds, and it's going to slowly pay him back over time. So this is how we helped him defer, millions of dollars. Actually, let's do the math. You take $29 million and you minus it by $24 million, and you're looking at an approximate gain of $5 million. Now, if you're in the state of Texas, state capital gains tax is actually 0. Federal is 20 plus Obamacare, which is 3.8. So it's about a 24% capital gains tax. However, he was not qualified for that because the property ownership was less than a year, right? So he's not qualified for the long-term capital gains tax. And so in this scenario, it's probably more like 35% is what the deferral would be, which is somewhere around $1.75 million. $1.75 million is a lot of money. And that's the whole beauty of the deferred sales trust is we can defer the tax and we can earn interest off of what we would have paid, and we can go buy more businesses or do more deals with the trust, which helps you to create and preserve more wealth. Hey, I want to teach you all about this. You can join our free mastermind every Friday at 10 a.m. Pacific Standard Time, and you can also check out our brand new book, Building a Tax Deferred Exit Strategy, where we do the deep dive into the deferred sales trust, my story to the deferred sales trust, and ways to use this strategy to help you build more wealth or help your clients do the same. You can find all this by going to capitalgainstaxsolutions.com. Hey, please rate, review, subscribe to the YouTube channel, also our podcast. We look forward to helping you out, and we'll talk to you again real soon. Bye now.